Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is November 10th, 2017, and this is my weekly trade review. This is for the week of October 30th through November 3rd. This is our website, rightsidetrading.com, where you can contact us, learn more about us. We have a lot of different things going on, so visit us, sign up. My partner's out there in Las Vegas this week, or was out there in Las Vegas this past week, presenting to other traders and showing them other things that we actually do. Check out our IPO special that we have here, and so you can learn more about things that we do, other than just this day trading thing that I do. But this day trading, this is all for educational purposes only. I'm looking at a Nasdaq future QQQ trade where we trade the 9:30 open. Uh, Red candle we trade down, green candle we trade up. This video will be posted out here on my YouTube page, Right Side Trader. Also on our Right Side Trading YouTube page is also out there. So it's going to be posted there also. And we're trying to get it where we get it coordinated to go out there. So let's jump right into the trade. Like I say, this is my weekly trade review. Today is November 10th, 2017. It's for the week of October 30th through November 3rd. You can email me at solomon@rightsidetrading.com if you have any comments or want to make any comments on the YouTube page. You want to contact me and learn more about what we do here. Okay, like I said, it's a morning trade. We're looking at the 9:30 open, a 5-minute candle. I go over a couple basic rules and where there's like how I look at this trade. Again, this is for educational purposes only. Trading is risky. This is not a trade recommendation. You can and will lose money at trading. So check with your financial advisor, check with your significant other before you get involved in trading. You know, but on this particular strategy, strategy that I'm looking at, it's a 5-minute candle. Red candle we sell, green candle we buy. We look to make 5 points or more. We look to lose 5 points or less. The two basic rules that I give is doji is a no trade. Greater than 10 is a no trade. We look to enter these trades at the close of that first 5-minute candle, and that's our entry point. Our target then, so you have to have a entry, close of 5-minute candle. Our target is 5 points. 5 points target for profit, 5-point target for loss. So now on October 30th was one of those greater than 10 days, no trade, but I actually traded it up for 10. One of my documentation things that I do. On October 31st was a down and stop. Actually, there's a video out there where I actually reviewed that. It should be posted out there on the YouTube page. I need to double check that. I know I did the video. I think I did put it out there. On November 1st, it was a doji no trade. On November 2nd, a greater than 10 no trade. On November 3rd was actually another one of those greater than 10 and down 410. And that's the thing. My partner had at once asked me, "What if you run into a week where there's no trades, like this particular week?" And that's why I put the comma greater than up for 10 and the comma down for 10. Usually, yeah, on that opening, there may not be a trade based on that first 5-minute candle, but that's where you also see my next best play. And my next best play, where I actually go, okay, I'm looking for another entry, and on Monday there, I had another entry. On Friday there, I had another entry. Actually, on the 31st, I actually had another entry. I don't think I actually recorded it that day. I know on the first and second, I didn't trade at all. So, but let's take a look at the charts and see how all this stuff looks on the charts. Bring these charts up. Okay, and let me, I may have moved my charts around a little bit. Let's get back. I can do it like this. Okay. First 5-minute candle here. This is 5 minutes. 5 minutes. To let you know that we are looking at 5 minutes. This first 5-minute candle here was one of those greater than 10. I'll zoom in a little bit here, where you can make that candle a little bit bigger. You can see these numbers here. You can just see that it's 7, over 7, greater than 10, no trade. But based on one of my other indicators, me seeing this market going like this, coming down like this, and it was coming down from one of my other indicators to let me know that I could take this trade going to the upside and trade it to the upside. Next day, this day here was another down and stop. This down and stop, as you can see, red candle, we actually traded down. We actually looked to enter this trade right around here. Uh, why I didn't take this trade to the downside is because we're in an uptrending market. Usually in an uptrending market, I pass on any down trades. I look for my next best play, decide if I want to trade it down. A better position to trade this thing down is where it double top. That's it. Was there any more supply up here that would push that thing down? And it actually did. If you would have got an entry up here based on supply and demand rules, you would have had another downward trade on this. And trying to take a downward trade down here in the demand area was a bad choice. So let's move on. Okay, on this next day was a doji there on that one. Let's take a look here. You see this doji up? Oh, it passed by. Everything already there. Doji here. Let's just take a see if I can look at open close. Open 74.25. Close 75.25. Dollar. No trade. You look for your next best play. With this indicator here, this cloud indicator to let you know that you're under the cloud. Maybe stay under the cloud to trade it to the downside, but no trade based on basic rules. Okay, on this day here, this is another greater than 10 day. You look at here, you see it here down to 30, over 40, greater than 10, no play. Again, you look for your next best play to actually trade that over here. And same thing here. Excuse me. You just look for your next best play. How you're going to play this thing. You got a nice little candle pattern here. It gave you a couple candles and another candle to actually trade this on. And that's the thing with me. I'm only trying to get 10 cents on my option. I usually play something close to a 0.5 delta on a day trade. That's okay with me. And this thing, as you can see, it went from 65 to over 95. That's over 30 cents. So I could easily get 12 cents on my trade or 10 cents on my trade. So next day. Next day here. This was Friday. Friday was a no trade, but this was that downward trade. Again, I think I've mentioned it once before. You had a kind of like almost a double top, and you had this line here, this green line here on one of my proprietary indicators and all that we developed. And what I know, or what I've seen, what I expect, put it that way, what I expect is this market, if it comes up to this point and have a hard time breaking this point, and we develop a small little 5-minute supply area, and plus knowing what I expect to see this market go in between these two lines. And that was a great thing about trading in the future market. You could trade from you can trade before that 9:30, expecting the market to do what you've seen it do before. So again, trading from here and back down, or getting in this thing as soon as I could, as soon as I saw it up here, and going back down was a great trade to the downside that particular day. And let's just look at it on the options and see what it looks like over here. And it did pretty much the same thing. Again, and if you've also seen where I say I'm going down, I'm at this white line, seeing the market come to this close. This is actually the opening. This is an opening line. I've seen the market go from this opening line down to this line, and that's this previous day high or previous day low, line. That's what this particular indicator kind of gives me. It gives me a range of the market. Also, the little wiggly line. Don't even pay any attention. I don't pay too much attention. And it also gives me the previous day's high and previous day's low, and that's what I like about that. So that's pretty much it. That's all I really want to cover. This is what the market's been doing this week. You'll see that next Friday, how I actually traded this week. It's another good week. When the market going up, I do okay. I love it. A lot of times you have to kind of like wait for that. You have to be kind of like patient and wait for those trades to actually happen. But it's been a good week. So that's pretty much it. Let's get back over here. Let's do a quick review. Like greater than 10, but played it up, down, stop, those no trade. Then another no trade, then another no trade, but played it down for 10. That's all I really want to say. Like I said, this is my weekly trade review for the week of October 30th through November 3rd. Visit us at rightsidetrading.com. Visit this video we posted out here at this on my YouTube page, The Right Side Trader. Check out our blog. Check out other things that we also have going on here. Little articles that we write are actually pretty good. Contact us. We got some free, sign up for our free videos here. On these free videos, we talk more about longer term type trading and some of the indicators and just the whole trading mindset. So that's all I really want to go over. Again, you guys have a great week trading. And thank you for viewing. And I'll talk to you next week. Again, this is Solomon from Right Side Trading. Later. Bye.